Hey, everybody. Welcome back to the show. Like I said in the introduction, I have Dan Morrison, the owner and CEO of
Amalgamated.
Amalgamated Sludge. It's nice to have you on the show.
Thanks. Good to be here.
Yeah, I am excited to dig into this because I have, the experience that I have in the industry is electrical and grid power. And so I'm excited to dive into this because we're going to go and have a discussion about some things that I'm not super well versed in. So really looking forward to this. What I would love to do, Dan, is actually have you kind of start with your background and what precipitated you getting into the world of Bitcoin mining.
Okay. Yeah, I'll try to keep it brief because I'm old. I got out of Texas Tech in '87 with a petroleum engineering degree, which was not a great time to get out of school with a petroleum engineering degree. Was lucky to get a job with Exxon, worked for them for a while, worked for a large independent for a while, went into the investment banking finance world for probably almost 20 years, doing equity research and a little bit of banking. It was a horrible banker. Came back in industry just in time to help a company go through a bankruptcy. That was in the 15, 16 cycle. Left that company, went back to run the company through a sale process. So kind of in summary, I've been in operations, non-operations, investment, finance, all around the upstream business, and kind of sat in every seat in the room, really, from a pumper out in the field in the summertime to on the board of a company going through bankruptcy.
Wow.
So a little bit of everything, which kind of prepares you for Bitcoin mining in
Yeah,
lots
no
of weird
kidding.
ways. Long career in a nutshell. After selling that company, looking for something to do, and some guys were looking for help trying to navigate the upstream business. And this was in late 20, early 21. Bitcoins are ripping. Everyone's trying to find gas supplies to mine off of, and it's just not that easy.
Yeah.
So through that process, got to know a lot of Bitcoin people, learned how the process worked, and kind of came to the realization that easiest, well, not the easiest, nothing's easy, but a good way to do this is to own your own production. So as luck would have it, property package came on the map or on the market, which was perfectly suited for this for reasons, lots of different reasons. It's not well suited for continuing as a regular gas business. We can get into that in a bit, but
Sure.
So it's not a lot of competition for it. Got it cheap, kind of a perfect fit. That process was in and of itself arduous, but finally got it closed and started a small mining operation in early 21, March of 21, just in time to, or March of 22, sorry, just in time to start writing everything down. So,
Yeah.
hard lessons on the cyclicality of everything, which you kind of know, but anyway, so it was long career at oil and gas, doing lots of different things, and then Bitcoin popped up, and through the oil and gas lens, it makes a lot of sense. And I think the industry, my oil and gas brethren, will start to come around more and more as Bitcoin evolves and some of the near-term kinks get worked out.
Yeah, and we're certainly going to dive into that too, because I am curious on your perspective on just, what your general take on the sentiment of the industry. But I have to back you up. So you started the company and you named it, I'm going to butcher the name, Amalgamated Sludge.
Yeah, Amalgamated Sludge. So
You're going to have to help me understand that the naming. Yeah, walk me through it.
So back in my financial world days, there was a fund, I think it was out of New York, that was buying distressed oil and gas credits. and working them out, rolling them up and working them out, just making money off of distressed assets. And that fund is called Amalgamated Sludge. I was like, that's the best name ever. Uh, so just like at some point, I'm going to have to use that. So actually, Amalgamated Sludge formed about a year had legally formed a year or so ahead of the Bitcoin business. But it was just a place to use the name, and it's kind of we're on the upstream side. I'm trying to buy out of favor distressed assets, so kind of sludge. So we're putting those together on the upstream side, stuff that people normally wouldn't want, but we can extract more value because we have a different view.
Sure. And I think is it a term in the oil and gas industry too? Like that it's an actual no, it's not.
Sludge is, I guess. It comes out of the bottom, crappy oil tanks, but and they're amalgamated. Just it's kind of like conglomerated. It's just
like
a word
congealed, yeah. Like it's
from the
yeah.
50s.
Okay. Okay. I appreciate it. I had to scratch the itch because I'm stumbling over the name a little bit, but I was also like, there's got to be something behind it. That's okay. That's cool. I like that. So maybe walk me through the operation. Where are you right now in terms of like the size, just the scope, scale, and size of your mining operation, and we can just kind of go from there.
Yeah, so we operate 55 producing wells in New Mexico, southeast New Mexico. I also call it the fringe of the fringe because Lee and Eddy counties in New Mexico are the hotbed of oil development. Some of the biggest wells on the shore U.S. are getting drilled there. That's not where we are. We're north of that.
Okay.
We're up on the fringe. We're producing from the same zone, but about 5,000 feet shallower. So it's 55 wells drilled in 06 to 08 timeframe, pretty much all gas. About 35 or 37 of the wells produce into our own gathering system, and that gas gets delivered to a gas plant, which we operate, which is really operating just as a compressor station at this point, where we compress the gas and deliver it to a sales pipeline, but that's also a perfect spot for us to set up and mine Bitcoin. So that's where we run our mining operation. We produce on a gross basis about 2 million cubic feet a day, which is pretty small in the grand scheme. But because of the well count, diverse ownership, it's a complicated operation from an accounting and legal perspective, in spite of the relatively low value. So and we mine with we have a 400 kW mining operation set up at the moment and about to launch kind of the next expansion.
Okay. All right. So you said 400 kW, probably containerized solution, I'm guessing.
Yep.
Okay.
And we're air cooled at the moment.
Is that soaking up all of your production then, or is that just okay?
It's a small bit.
2 million cubic feet, and the little I know that's actually quite a bit of natural gas.
On a net basis, we're about 1.3 or 1.4 out of that 2 million, and we're only using about 8%, 6 or 8% of that for mining at the moment. About 6% of our available sales volume. So we're still pretty small, have a lot of room to expand.
Yeah. Curious, do you see you moving into using all 2 million for Bitcoin mining, or is it kind of is it really a balancing act and a modeling, out what's going to be more lucrative at what point in time, whether to sell the gas or mine off it?
It's kind of it's a little bit of both, and the 2 million is not fully available to us. Net of what we're mining and using for other compressor fuel and so forth, I have about 1 to 1.1 million a day that's available to us because we don't. The net means I've got partners in a number of these wells, and then a number of the wells aren't connected to my system, so I can't physically access the gas. So I've got about a million to play with on the mining side, and even though gas prices are low, and we can talk about this a bit more, but being a dual revenue miner makes a lot of sense so that I have an alternate source of income, and I, I don't have to sell Bitcoin to meet my operating obligations. So that makes me a little bit more agnostic on Bitcoin price,
Yeah.
which is a comfortable place to be. I don't think I can. At some point, I'll probably grow to a point where I have to sell Bitcoin to fund operations. But that's sort of the balancing act between. And we talk more about vertical integration. I think wow, that's a great model for the upstream. But that's where I'm at now, vertically integrated Bitcoin. I just get to accumulate. With my next expansion, I should still be in that position, and then we'll start to tip over into being a true Bitcoin miner where I have to sell Bitcoin to pay the bills.
Okay, sure. I was actually curious about, what treasury management looked like for you, but it sounds like you're offsetting just with the sale of the gas. So you're able to, that's a pretty sweet position to be in.
Yeah, because on the Bitcoin side, our our direct expenses are pretty low. It's maintenance on the generator and it's repair on the miners, and then it's your fuel cost. On the fuel, I'm buying from myself effectively, so it's
Hmm.
not a direct cost; it's internal. It's a I'm foregoing that revenue, so that's a real economic um, cost, but it's not. It's very different to when you're not having to write the check. It's a
Oh,
subtle.
big difference.
I
Yeah,
mean,
big
it
difference.
it lets your it takes a lot of stress off your balance sheet when you're not stroking the check for the fuel bill every month, and just from cash flow management. My lag on getting paid for gas production is about 25 days. So, you can get pretty significant lags built up, and if you're really running stretch, your short-term cash can get pretty tight. But um, so that's it's very comfortable operating that way when I'm just selling the gas to myself. I still pay taxes and royalties on it, so there is a cash burn associated with that, but it's much less than just writing a check for the full boat.
Yeah. Oh, absolutely. Um, I think I'd like to ask you a little bit more about the vertically integrated part too, because we actually chatted offline, before we were able to record, and you mentioned that was, a huge positive for you to be that way. I'd love to hear your thoughts on that. Maybe just expand on that a little bit more. Why that's such a positive for you?
But if you think about the majors, start with those guys. They've got uh, massive upstream businesses, um, and then massive downstream businesses that are kind of a little bit kind of cyclical with each other. When oil prices are low, the upstream struggles, but the downstream profits from that. And then the flip side, oil prices are high, the downstream struggles, but the upstream profits from that. So it's a kind of a, and then we draw a circle around the whole thing. It smooths out those ups and downs because they're internally hedged, and if they're doing anything right, the grander enterprise is constantly profitable.
Hmm.
So for small producers, that's impossible to do. I can't go vertically integrate as an oil producer because I can't run a refinery. As a natural gas producer, you're kind of even worse off. The best I can do is own my own midstream, and that gets me a little further down the road. But I'm still beholden to the ultimate gas market. There's not an alternate market for my gas.
Sure.
I can't store it. I can't. I'm a price taker all the time. So with a Bitcoin as an alternate market, does a couple of things for me. It's not really counter-cyclical with gas prices, but kind of a little bit maybe. But it's at least an alternate, and and I can sell into that. And as long as I'm not strapped for the cash, I can also store the Bitcoin that I produce, which you can't do as an upstream producer, even with oil. You don't have it. You can't have enough tankage to store your production for more than a couple of weeks. So you're a price taker as an upstream producer, regardless. This lets me have some discretion on when I'm selling my product, even after I convert it to Bitcoin. Am I speculating on Bitcoin in that process? Yes, admittedly, but um, it just gives you more discretion about how you're not completely beholden to the pricing whims of the market.
Yeah, well, and I mean that's not too atypical for what you're used to anyways in the commodity business, right? I mean, you're kind of speculating, I think, right, on the future price of oil and the gas, right? I mean, or is that not right?
No, you are, and you're doing it in a very coarse fashion, right? It's like I think oil's going to be good, so I'm going to drill a well that's going to
Right.
produce for 20 years.
Yeah,
So
right.
and now I've got some more discretion on, okay, I'm producing it, I'm converting it to Bitcoin, and I don't like Bitcoin price this quarter, and then hold it.
Yeah. Yeah.
And the Bitcoin derivative market is nascent and emerging, and that as that develops, um, producers, miners will have a lot more tools in their kit to help smooth the risks out even more.
Yeah, maybe touch on that a little bit more when you say, the Bitcoin mining will be the tool to help smooth out that risk. You just mean from like offering up the flexibility of when to sell and when not to sell and what to do with the gas and
Yeah, and more specifically, when the Bitcoin derivatives futures market matures a bit more. Right now, there's not a lot of, of depth in that market or duration. You can't go out very far.
uh, Luxor, I think, has a product. Have you looked at that one?
Not in detail, but it's still kind of short term. They may do 90 days where they'll lock in a hash price for you, which is great. That can help smooth things out. But I can't go, lock in a couple of years of pricing or put some costless collars on my pricing that I give up upside but get rid of downside. Stuff like that. That the commodities market for producers have all these great tools that they can use, just
I
not
see.
available yet in Bitcoin.
Sure, sure. Yeah, and I candidly don't know enough about that type of product and that type of stuff to even really ask you the right question, because you're not the only one that's brought that up, that Bitcoin and Bitcoin mining really could use a futures and a derivatives product and that type of stuff. I wouldn't even. I am curious about it, but I need to do a little more homework before I even start to ask the questions.
And it'll come. It's a maturity issue. Um, Institutionally, Bitcoin's still very under adopted. It's big money that plays in those, provides those products, big trading desk, and it's just not there yet for Bitcoin. It'll get there, I think.
I think so too. Um, I'm gonna also bring you back. You mentioned fringe of the fringe is what you kind of consider your locations. Maybe go a little bit deeper on like what drew you to that. You touched on it a little bit. It was, kind of an underperforming asset, but what drew you to the fringe of the fringe when site selecting for this type of an operation?
But it's lack of competition, right? Because competition in an acquisition, competition turns into higher prices. So you want to go where the perfect, not what Gretzky's great thing was. We don't skate to where the puck's going to be. We skate to where no one's going to hit the puck.
You said,
You can't
yeah,
we
yeah,
we want to play where no one else wants to play, and that's because if you look at these through the traditional lens, you're stuck in one gas market, which is known as the Waha market, which is a horrible market.
hmm,
Um, and so there's lots of downside, not a lot of upside. Geologically and from an engineering perspective, there's not a lot of upside to these assets either. I think there's some romance, but we talk about that. But it's not obvious, not anything anyone's going to pay for. So you're sitting there staring at a bunch of abandonment liability and marginal operations, just lots of headaches. And it's New Mexico. I mean, New Mexico is a very difficult business environment to operate in. The state tax regime is very complicated. just setting up an entity to do business. If you want to try to bring in a foreign entity, it might take 60 or 90 days. So we ended up starting a New Mexico entity to do this.
Wow.
And it's not an easy place to conduct operations. The oil and gas regulators there are great. They've got a lot, but there's 3 of them, so it's kind of navigating all of that is it's doable. And all the people we work with on the regulatory side are great. It's complicated. So for someone to go buy marginal assets in a difficult operating environment, if they weren't already in New Mexico, there's no way you would do it. This makes sense.
Yeah. Well, yeah. What I hear you say is that you have this really, really deep moat around you, and that's everything you just outlined. It's difficult to get into. It's marginal asset to go acquire to start with, and you kind of have all these hoops and loops and hurdles and things you got to jump through. I can really appreciate that. That's a really smart way to go about it. Are there other regions in the U.S. that are kind of like that? And I don't expect you to like spill the beans on like the next magic location, but
No. So the Rockies are kind of like that. You can find, and Bitcoin mining is really focused on stranded assets and flare gas. People who don't have a market. We have a market, just a really bad market. The Rockies kind of suffers from that. So there's other parts of the country where the distressed asset model can work. We have a unique asset here that kind of makes me a little agnostic on geographic location for additional gas acquisition. In that, one of the things we own is access to an interstate pipeline. As much as you never really own that, you pay for it, and the pipeline company controls it.
Yeah.
But we from the producer side, we're the only people there, and it's a delivery point into the pipeline now. But we can reverse that for a modest amount of capital. And now I'm a buyer of gas in this crappy market, so I can go buy out of favor assets anywhere. Let's say Gulf Coast, and they're out of favor for different reasons. Good market, but marginal production, whatever, hair on it. And I can sell that gas into the Gulf Coast market, buy back over here, catch a little arbitrage on that difference, and keep fueling my mining operation with relative to the rest of the U.S. cheap gas.
Wow. Well, yeah, I mean, and it's just like right out of the gate, most of the players out there don't want cheap gas. So I guess if you're selling, or if you're buying it, you want cheap gas, but the people selling it don't want cheap gas. So I guess the narrative I always hear is that, that's awesome. When you were modeling out, because again, one of those things that we kind of chatted briefly about offline was kind of all the work that you did modeling, for just this business, and you have a lot of complexity to it. That was part of your background, right? I mean, you did a lot of modeling in your previous roles, right?
Yeah. So it's I'm not the best modeler, but kind of unique. Yes. So you kind of unique situations are kind of fun to analyze. And Bitcoin modeling by itself, mining models have a lot of similarities with oil and gas, in that your production is going to decline because of the growth in the network hash rate. So you got to model for that. And then you have to, the halving, takes that production that's already declining and cuts it in half at some point in time, not too far out now. That's in addition to having all your normal operating expense assumptions and capital assumptions. So it's kind of a simple model, but when you start thinking about your source of power coming from your own supply, and instead of drawing your circle just around the Bitcoin mine, you draw your circle around the whole operation. It gives you a lot more flexibility on making those capital decisions. You never want to make, invest capital you know is going to lose money, right? No one wants to do that. And you really have to have some positive outlook on Bitcoin price. Doesn't have to be crazy. You don't have to be one of these to the moon guys. But you have to have, kind of 10 or 15% annual CAGR on your Bitcoin price to get comfortable making investments. And historically, that's easy to justify. I mean, that's very
Yes,
low.
that's very, very low for the annualized CAGR. Yeah.
Yeah.
What?
So, but you have to, unless you're somebody who's going to get comfortable with that kind of assumption about Bitcoin price appreciation, you shouldn't be in the business. And that's just that simple.
Yeah. Well,
It
I
won't
can
make sense.
appreciate the modeling component to all this. I've built my own for electricity, like grid fed operation, and there's one of the components that I kind of always run into. Oh, sorry, hold on. I don't know if you could hear that. I was getting a Slack call.
That's
Um,
okay.
I'm sorry. So like I was saying, I have done some modeling for like grid connected operations, and one of the things that I always kind of stumble into is having to sell your Bitcoin either on a monthly, quarterly, or whatever your cadence is, monthly, quarterly, biannual, annually. How do you determine what the price of Bitcoin is going to be at the time that you have to sell to either recoup your treasury or whatever your strategy is there?
So far and that's kind of the magic of having your own fuel supply. Um, I can let the Bitcoin accumulate and enjoy whatever modest price appreciation I've assumed. All my production gets to benefit from that, not just future production as you go. So, you know, my and my operating margin goes from, if I'm having to write a check for fuel and power and stuff, call it 30% maybe, goes up to 85%. So I have a lot higher margin to to have with,
Yeah.
and that all that production enjoys the full price appreciation that I assume in the model. That's why it doesn't take much price appreciation to make it work.
Yeah. It's it's one of those things that as I've tried to make my own, and then I listen to how you're thinking through it, it's one of those things most people are pretty cagey about, their model. It's one of those things I've always wished that I could really take like a deep look at with somebody. I have a background in commercial multifamily real estate as well, and I mean the modeling on that is also very similar to Bitcoin mining, except like you said, what you're generating is declining versus apartments. It's either very stable or you're marginally increasing rent over time. Um, but there's a lot of people out there that will either just send you their apartment model, or they'll spend an hour with you and talk you through it. I hopefully someday can do that with somebody in the Bitcoin mining space, just to see if I'm thinking about it right. Even
Yeah, and it's the because I'm talking to some guys about a joint venture right now, and it's been hard for me to get people to come on board mining with me in kind of partnership, because like I got to study the gas and I got to market, and it's not a buck and a half like these guys are, or less, $1 you get from a flare stack. Yeah, my market's over $2. It still makes sense, but to really make it sense, they need to own some of that gas production as well. So I've got a structure I've been kicking around with some guys where the JV owns some of the gas, and the JV enjoys the benefit of not having to write a check for the fuel for its life. That just it takes a lot of the sting out of being a miner.
yeah,
And like, what I'm thinking about doing is, I never thought I would host people, because I've had lots of inquiries. That's a whole different. It's like I don't want to deal with a lot of customers, and it's just not. It's a whole different business. And now I'm like, with the halving approaching, I can offer people a really good deal that's really good for me too, um, on a hosting basis, where
hmm
they don't have to write a check for their power, and they kind of bulletproof through the halving. So it's
Are
another
you
little.
able to share a little more on that, or
Yeah, so it would look something. And these have been done before, I think. Um, it's basically a revenue share or a hash rate
okay,
share.
yeah,
So you come, I'll run your machine for you, but you're going to give me 70% of your hash rate, which sounds like a lot.
it does sound like a lot.
But in the current market, that's for most machines, that's going to actually be an uplift to your current profitability. If you're with hash price at 60, if you're paying power at 7 cents, your margin is below 30%. And I'm going to give you a 30% margin out of the gate. And more importantly,
Yeah,
hash rate goes down below your cost of production, you're still in business because you're going to be on a check. And your payout's going to be lower, but and similarly on the upside, you'll get the upside if the hash price goes back up. You won't have the operating leverage that you would have under a normal hosting deal. But with the uncertainty of the halving,
yeah,
uncertainty of Bitcoin prices near term, it'd be a great place to park a miner and not have to sweat too much.
yeah. That's interesting. It's actually one of the few, because I have some equipment hosted as well, and it's kind of standard, on grid type of power source and hosting contract, and um I have not actually looked at just assigning over that much of the hash rate. I think that also helps align, just it helps further align like interests of the groups too, because
Oh yeah,
you're incentivized then to keep all their stuff running and to keep it up, and yeah.
absolutely. So it's everything works better when you've got alignment. That's why I mentioned earlier. It's been hard for me to partner with people because I'm the gas guy. It's like selling the gas. I don't want to get a position where gas goes to $6 and you got to shut in because you can't afford to pay for my gas. Um, that's not a good for me, but not good for a partnership. So you always want to build partnerships that, and you can never plug all the holes. But, if you reduce all the opportunities for failure, uh, reduce as much as you can the opportunities for failure, it'll be bigger chance of success. Kind of simplistic, but a lot of
Yeah.
people don't think about it that way.
How steady is the gas supply? And I ask because the other thing that comes to mind is like in a partnership like this, as a hosting customer, I'm very interested in what the uptime is. How steady
So
is your gas supply to the operation?
the gas supplies can be very variable, but we have a secret weapon. Um, so it's diversified among the wells that feed that system is like 37 wells, but they equip all over the place on production. They're up and down, and we'll have days where production's off for a day or two, and we have to go do some stuff to the wells. Um, but it's, especially at the levels I'm looking at fueling, we never dip below that. Um, and then even if we did, because there's another piece of equipment operating on site called a compressor, and that's what um, lowers the pressure on the pipeline so the gas can flow into it, and then compresses it so it can get into the sales pipeline.
Okay.
So it's gathering gas. It's a crazy machine. We just got to replace the expensive one with an older, cheaper one, but it's a it's a two-stage compressor that goes from 40 psi to over 900 psi, and we can
Whoa.
move 1.3 million a day doing that, which
Whoa.
isn't gas world. It's not a lot of gas,
Okay.
but it's a 400 horsepower two-cylinder engine that does. It's called an Ajax engine, and it the date from the 30s. It's this great piece of engineering that's just runs and runs and runs. But when it doesn't, our mining operation doesn't go down because inside of our system we probably have about 500,000 cubic feet of gas compressed to 900 pounds that's sitting around that we can sit there and draw on for a couple of days if we have extended downtime on the compressor.
Sure.
we haven't been down on the compressor for more than a couple of hours since we got the kinks out after installation. And the only
So
downtime
then, sorry to jump in. So I guess maybe what I'm hearing you say is the only downtime you guys have is when the compressor goes down. So it's not really a matter of like supply from the wellhead or.
right, and it's not even the compressor. The compressor can go down for a couple of days, and we still have plenty of fuel to run because we have this supply that's sort of stored on site in all the piping that we've got.
Sure.
So the generator that we have running now is small. It's never gone down because of fuel. It's always, we've had downtime due to some mechanical issues and the normal PMs, but we don't go down in fuel. And
Oh,
wouldn't
that's
anticipate that. So
fascinating.
it's pretty good size, actually.
Real. Oh, see, that's fascinating to me. I again, and I said it at the top, not having a lot of experience in oil and gas, natural gas. My assumption would have been that the gas supply was spotty or not super constant, but it sounds like it is, unless you've got like a super big operation running.
Well, for most gas to Bitcoin operations, it is because you might only be tied up to a couple of wells. Here we're tied up to 37, and I have this massive infrastructure that also packed full of gas just as part of the normal process. So I've got this advantage that most gas installations won't have. If you're just at a tank battery that's serving a few wells, a couple go down and then you lose half your supply. There's on a lot of stranded gas operations are a lot more skittish on the fuel supply side.
Okay.
So
yeah. Okay. So that's good to know too. Then, because otherwise I would have gone running around thinking all the natural gas sites are just rock solid, steady.
Not all the same.
Okay. That's good to know. I am actually curious, to get your take on, so like the oil and gas guys that may also be on the fringe of the fringe with you in New Mexico or in other parts of the US that, maybe it's, not such a high performing asset. What might they be missing when they hear about Bitcoin mining and they just dismiss it? Like what do you hear as like the common dismissals of putting Bitcoin mining on these operations?
It's really just getting comfortable with Bitcoin. It's kind of that simple. They've all looked at it, or they'd be crazy to not have looked at it by now, because you have these PE shops are all full of young guys that have all looked at Bitcoin. They've all modeled it. And like we discussed earlier, unless you get some kind of positive bent on Bitcoin worked into your model, everything always looks marginal or doesn't work at all. So that's the biggest hang up is Bitcoin as an asset and how to look at it. The operation side of it's easy for them. They're running another big machine on location. They might be already running a bunch of big compressors. This is just another big engine. The electrical side's easy for most of them to get, and in all candor, the Bitcoin mining side is the easiest bit of all. To truly optimize it and do it at the level that I'm not doing it at yet is harder. But just to plug machines in and get them running and mining, I did it. So it's doable. But the thing that blows them up when they start evaluating it is, how do we think about Bitcoin?
Got it. And so they just don't have, like you said, kind of that, which again is super low, like even a 10% annualized CAGR on the price of Bitcoin. And I wonder if it's also,
I'm sorry, even that's going to generate a pretty modest return. So the way I think about it is, whatever investment you're making is, you're really putting a free option in place on Bitcoin, and you're doing it in this vertically integrated fashion where you're just diverting from some of your sales. On paper, you're going to be realizing a much better price. As an investment, the capital that it takes to do that is going to look pretty marginal. but it's buying you access to that market. And if that market takes off like a lot of people think it's going to, then the thing that always happens is will happen, and that's you'll want to get in, but it's too late because that capital investment just tripled. Um, Everything gets
Yeah.
scarce. Then it's hard to do it. You have to kind of go ahead and get the exposure and get the positioning ahead of that. And if you can do that in a way that you're comfortable with a modest return, then it's doable, but they have to get comfortable with Bitcoin.
Okay. Yeah. It's an interesting component to it all, that's for sure. And it is always funny because I think a lot of the price in the infrastructure, between the Bitcoin mining computers, and I mean, you even saw some of like the container solutions go up in price, which I thought was crazy. That people were raising the price on that type of stuff. But you saw all that go up with the hype and the mania, and I think I shared this with you offline and not on the episode so far. But I bought, all the equipment I bought was all during that
Oh
kind
yeah,
of frothy top.
I'm right there with you.
I learned a lesson. Yeah, it's
When
almost like they have to learn the lesson or feel like they missed it to then get in it the next round. Yeah.
and that's we were wanting to get deployed as fast as possible. As soon as I closed the upstream acquisition, I put in. This was November 21. The data centers were long lead times, hard to get, expensive. And I put in an order right after we closed because that was the choke point. ASICs were available but expensive. Generators is a whole different topic, but that's where we intersect with other industries and compete for capital. Equipment is on the generator front. The data centers were the long lead time, so we dropped an order as soon as we could, and delivery was still. We traded one of ours on order for one that was already someone had on hand, and it got us going in March. Um, our stuff didn't show up for another month and a half, so it would have
Oh,
been
wow.
4 month lag, which in hindsight would have been better because I would have bought ASICs cheaper. But it's kind of like you're always, as long as you're always investing and try to invest less in the up cycle and more in the down cycle, um, things tend to work out. You can't avoid not investing sometimes. And kind of,
Yeah, absolutely. I would be curious to also get your take on what do you think the future of like the oil and gas, or maybe even just the natural gas industry, looks like with Bitcoin mining. So kind of talking about people starting to come around to it and people starting to learn more about it and understand how to apply some upside to the asset value in the future. What do you think the future of oil and gas looks like with this type of asset class on it?
I think oil and gas will be the home for a lot of the network capacity in the future. And that will happen when Bitcoin, and stabilizes is a bad word, but gets less volatile and kind of more predictable. And more importantly, gets more accepted as an asset. Uh, and then, and it's not just Bitcoin, there'll be other high performance computing applications that can use remote uh, data centers and don't have to have the you know instant connection capability that you have in a tier 4 data center.
Yeah. Yeah.
Um, but that's when I think at some point between here and there, you'll see oil and gas companies looking at that as an alternate revenue stream. And and back to it, when you take when they can run that DCF model, and halving becomes less important over time because the Bitcoin reward becomes less important over time, and fee revenue should offset that. So that should be more increasingly stable from a miner perspective. I don't think it's ever going to be crazy lucrative. It'll have its moments, but it'll be a nice ancillary business for someone who's got access to their own power, especially if their own power is relatively cheap.
Yeah.
So I think that's where you'll see more adoption from the oil and gas business. Actually, I put a post up on Twitter or something the other day. If you think kind of long term, buy power, mine Bitcoin as a business model probably doesn't have that long of a lifespan. It's maybe a couple more halvings at best.
Yeah.
And then, given everything we're doing to ourselves around the world, power prices are biased higher. So that's a tough model now. Miners lost a shitload of money in the last 12 months. It's always going to be a hard model. So the guys that have an advantage, or if you have your own power that's relatively cheap and you make the decision to divert it into mining or not, or you can make that diversion into mining and wait out the cycles like we
Yep.
talked about, then that's a very powerful business model, and that's going to exist with the guys who have access to the energy, and that's producers, or here's the scary one, nation states.
Yeah.
Around the globe, we're unique that the mineral assets in the U.S. belong to individuals, largely, and those are state assets everywhere else on the planet. So you can have big state enterprises that control power, and they get really agnostic on price of Bitcoin if Bitcoin becomes strategically important.
Yep.
So that's kind of an ugly picture for mining down the road of, price in different state actors who have access to lots of energy getting in the game, and that's going to happen.
Yeah, what I find so fascinating about like the oil and gas and the natural gas is Bitcoin mining is coming in as such a different type of tool to be applied to the industry than like the grid powered. It's for on grid. It's more about stabilization, just because of either it's all the renewables coming online or you name it. But Bitcoin really comes in as like a stabilization tool, and also and this is where it overlaps with the oil and gas, is it comes in to help soak up excess power.
Mm-hmm.
I think I saw something from 2021 that it was as much as like 60% of electricity generated is wasted.
Mm-hmm.
So I mean, it's comes in different there, and then oil and gas, yeah, it's really going to help monetize and yeah, I appreciate that perspective on what you think the future looks like. I think we could probably pontificate for quite a while and riff on what the future would look like for a while.
Yeah, and you never. I mean, the main thing for producer, if I'm advising a producer, and I consider myself a producer kind of first because still I'm not long gas.
Mm-hmm. Yeah.
Is you just want to get the exposure, right? And most guys can do it it's crazy the shift in the industry since I've been involved. The upstream industry's gotten incredibly risk averse. I mean, guys used to go drill exploratory wells, $10 million, 10% chance of success. But when you run those risk weighted economics, the potential reward was large enough to justify the risk. And as an industry, we don't think that way anymore. So, for deploying a megawatt of mining capacity is probably about $1.2 million capex right now. Depends on stuff, but that's a good number.
Like the computers, the gen set, the container,
Yeah,
infrastructure,
you
everything.
can kit out a megawatt for $1.2 million, $1.4 million, and get good stuff. You're not doing it the way I would do it on cheap, and it's going to consume 300 MCF a day of your production. Well, that's very small for most producers. That doesn't get you part of a frac job on most of these horizontal wells. I've seen some locations that might just build the location. It's the oil and gas business is incredibly capital intense, but we've gotten away from accepting risk. And so back to my modeling conversations, let's go run a model that's 50% Bitcoin staying flat and 25% Bitcoin going to the moon and 25% Bitcoin going back down to some low, that model's gonna rip um, on an economic basis, and people just aren't thinking that way anymore. That kind of risk assessment and risk tolerance has been flushed out of the system by
Hmm.
horizontal drilling, and that's the worst thing that's happened to the industry from a mindset perspective is getting drunk on the perceived low risk of horizontal drilling. It's just as risky as everything else when you look back economically.
Oh, interesting. Okay.
Look how many companies went bankrupt drilling horizontally. It's like it's not riskless. People like it's a manufacturing process. No, it's not. Every well you drill can go sideways on you in a heartbeat and cost you an arm and a leg. And then the my favorite thing is you got a big drilling program and you find out you've been doing something not quite right. Well, you've already made the same mistake 10 times on
Hmm.
each of the rigs you're running. It's just like it's not a it's a big boys game. It's a big balance sheet game, and it's still got plenty of risk in it. It's just been masked by the perception of repeatability and horizontal drilling and blah blah blah.
Sure. Sure.
That's my rant about the industry.
Yeah, no, I appreciate that. And just to keep a tab on the time, Dan, I did want to just kind of end with, asking you, we've touched on it a little bit, but maybe go into what does the future look like at Amalgamated Sludge and what you're looking to do with it, and maybe just go there for the audience.
Oh, sure, yeah. So I alluded to some expansions. I've got a couple megawatts comfortably of capacity to expand into. Limited capital. Haven't raised any outside capital, so I'm still trying to do that creatively. And I touched on the JV concept. We didn't go into details, but um, those conversations are ongoing. And then maybe a hoster. So that's kind of in the near term. That's what I'm looking at. Over the longer term, the infrastructure that I have sets up well for someone who wants to diversify. When I say someone, a miner who wants to diversify into a gas powered mining operation, um, because I have pipeline access to this distressed market. I've got I have a 40-acre site in fee where we can build out an installation. So it's well suited over the longer term to do a much larger off-grid gas-fired data center development. And I've got the early conversations going on with that. That's a whole different game than cobbling together a megawatt here, megawatt there of mining capacity.
Yeah,
But I've got some of that conversation or that ball's starting to get batted. So that's what I'm working
very
on.
cool. Well, I appreciate that, and I want to make sure I give you some room to give the audience a handoff. I want them to be able to get in touch with you. How can they find you? Where can they find you? However you're comfortable, or whatever contact information you're comfortable sharing. Please feel free to drop that too.
Yeah, probably the easiest is at Sludge LLC on Twitter. That it's supposed to be anonymous, but it's not very anonymous anymore. So that's probably the easiest to remember and easiest way to find me is Sludge LLC on Twitter.
That sounds good. We'll link to that in the show notes as well, and in Bitcoin mining and how you're thinking about it. And you know, like I said, it's interesting to hear how Bitcoin mining is a completely different type of tool in your industry. So I really appreciate it. Thank you.
Thanks, Ben. Appreciate the time. I'll send you a couple models you can chew on. So
Ooh, all right, awesome. Thank you. All right, Dan. Well, you take care.
thanks.
All right.